And like I said, and like I told you in August when this happened, markets no longer believe the Fed. They gave up that. Why they gave up that confidence at that point? Maybe because they felt, I don't honestly know. Markets no longer believe the Fed. Why they gave up their credibility to the markets in August, I can't really answer that. But now, when the Fed says something, markets go, So market pricing has shifted rapidly to price in rate cuts. And the Fed is saying, we are not going to cut, we're going to keep raising. And yes, they only raised 0.25 point, still well below inflation. That's not going to do anything. But the markets are going, yep, you're going to start cutting. And the central banks are going, no, we are not. We are going to continue to raise, and we're going to hold it there for a long time. And I'm recording this before Fed Chair Powell speaks today, so I don't know exactly what he's going to say. Sorry about that. But also what I want you to recognize is that this line here are all the times the Fed has raised the interest rates. And look at the conditions, the financial conditions are as easy as they were before they even started. So all of this has been a waste. Why? Because we are at the end of this currency's life cycle, this big fiat money experiment. So what would have worked in the past no longer works. You see what I'm saying? When I've been saying the Fed is out of tools, the only one they still have is money printing. And when they turn around to do that, to fight this looming inflation, there's your hyperinflation. I mean, I really think it's already begun. I just don't think that that is recognized yet. But the central banker market dissonance is more than just a war of words. The bullish bets on a shift to rate cuts, in other words, the markets think that they're going to cut rates, may in fact mean policymakers, central banks, are forced to hold rates at higher levels for longer to achieve the tightening that investors are now actively undermining. So the markets are at war with the Fed. Remember that saying, don't fight the Fed? Guess what? The markets are fighting the Fed. This is a very, very dangerous game of chicken because these looser financial conditions, they are a problem for the central banks. Central banks aggressively hiked interest rates last year as inflation in many countries rose to the highest levels in decades. Now, falling energy prices are reducing headline inflation and fueling optimism that monetary policy may be eased later this year. In other words, that they will pivot and start to lower rates so that these corporations can continue on their debt-feeding frenzy. The reality is despite all of that sharp monetary policy tightening, financial conditions have eased around much of the globe, posing a challenge for the central bank. And what are the central banks doing because of this? Well, frankly, they are buying gold. Now we have the full year 2022. Keep in mind that global monetary system was changing in the 60s, and there was a run on the dollar by foreign governments sending in their dollars, pulling the gold out of the U.S. system